if you are an FNGR holder, you might want to listen to this. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with an FNGR finger motion, technicals, raw price action, and some statistical thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa. With that said, let's go ahead and dive right in. Okay, so yes, you're looking at a little bit of a saturated chart here. However, we are looking at a bullish formation. This bullish formation is called a descending channel. And usually descending channels present a reversal of trend upon an appropriate breakout. Okay, so we're going to go ahead and go over those details first. The reason why you see so many Fibonacci levels here is just that I wanted to back test the asset in a larger term time frame. This is the 3-day time frame, into seeing if it is following geometrical shapes or geometrical trading patterns. So it actually is the 1 spot 618, the 2 spot 618. The 618 is constantly being used within the trading of this asset. So this is a good sign. Now, the reason why I am saying that you're going to want to listen to this is because I was about to record the video in a bullish outlook of this until I caught something, and I believe that there may be a massive bull trap in play here, and I can't verify it just yet, but I would love your thoughts in the comments below or on Twitter or on Discord. Okay, so this is what I'm looking at here. Okay, first of all, we are looking at this chart in non-logarithmic. Okay, so usually I use logarithmic charts because they do present more of a detail to me, but in this case, I did notice that price action was following the trend pretty well, coming right back down after the breakout here to test this newly converted resistance into now support. As you can see, it has been testing it pretty well, which led me to believe that maybe we are following this particular ticker in the non-logarithmic chart, in just a traditional chart. So I'm going to give you the perspective of a logarithmic chart, the same channel. Okay, so this is the following chart. Okay, so in this chart, we are following the golden rule of 3, and that golden rule of 3 usually consists of 3 tests of the resistance, followed by a large capitulation event or accumulation period, and then a true breakout attempt on test number 4. And it does appear like this candle, this 3-day candle, came back here to test the newly converted resistance into support, but I honestly feel that this is not a test. And this was more along the lines of a FOMO event still continuing on to the upside. So I believe that this candle was more sentiment based than it was a confirmation for or a validation of support. Okay, so please bear with me with this. Okay, so if this is not a test, we are sitting at $3.84. I know after hours have already changed the price, but you know, we can't actually see after hours prices on a 3-day chart. Actually, anything above an 8-hour chart, you wouldn't be able to see the after hours price closure. So in this case, the support bottom here would imply that it would be around $1.10 from this massive high that we have right up here. Okay, but this wouldn't be like I mean, anything is possible, right? But I don't think that this would be one shot to the downside like this candle was to the upside. Although the way down could, you know, probably happen like this, but I don't think so. I think it's going to be a slower decline. If I were to guess. Now, the reason why I'm telling you that we could be facing a downside in this rather than an upside are for a few things and so minute details I need to present to you. Okay, first of all, we are in a bullish formation here. Okay, so usually when we have an uptrend and then we start printing a descending wedge or a falling wedge, you know, some people call it different things. This formation usually presents in upside. It does have a continuation to the upside, and it usually does tend to come into fruition once it reaches the 70% to the apex of the triangle itself. So in this case, we are kind of a distance away from an actual true breakout. I did leave this metric here because it is a gap between this candle low and the wick high of this candle here. Okay, so as you can see, days later, it actually came back and closed that candle and has used it as a range of trading. It's been kind of sideways here. So this presents a bullish outlook. Okay, that's great. It looks like it's it looks like it's primed for an upside continuation. That's all very good. I started to pull up the ARC-Series indicators. Now, in this one in particular is going to be the ARC DBSI, which is it consists of all these numbers here. So I started to notice that every single time frame had the bulls were losing to the bears. So the way that this score is presented to us is that the indicator actually takes a statistical average based on a score off of every single candle and gives us that cumulative average right up here. Now, I mean, I can go down the list for you. Just keep your eyes on the score between the bulls and the bears, and you can see 3-day chart. 34 to 66 by daily chart. We're looking at 37 to 63. This is a daily chart, 27 to 73. 12-hour chart, 32 to 68. 31 to 69. 4-hour chart, 19 to 81, and so on. I mean, I'm talking about massive, like a massive amount of bear wins here. So there could be something brewing here that maybe the indicators are actually looking at. Now, by the way, the Crypstex ARC-Series indicators are available to you. They are live now and can be acquired. All you have to do is just send me a DM and we'll go ahead and go over the details as to how to acquire these indicators, okay? This is just one of them. We can go over some more, but this is really important for me to talk to you guys about, okay? So yes, I did notice that I started getting from the DBSI a negative read. And another thing is, for the new viewers, this is what you're looking at here is volatility, and volatility represented by this indicator BBWP. Volatility is direction neutral. So we pair it with an indicator similar to this one here, which is called stochastic momentum. It is proprietary to TradingView software, and if you'd like to actually sign up for TradingView, the link is in the description below. That actually really helps me out as well. Okay, so in guessing the direction, I've actually backtested this indicator in several tickers, and I've gotten back at about a 75 to 91% accuracy in guessing the ticker's direction. So it's not perfect, but it's very, very good and consistent. Okay, so in this case, the 5-day chart is still giving us a downside read. So this is why I'm saying that I don't think that the capitulation event would be an immediate sell-off like these candles were to the upside. I don't think it would be that drastic. And the reason why I'm saying this is because this is suggesting that. It's suggesting a 5-day read with not, I mean, it is definitely on a downside pivot, but it's not a nosedive, so it is continuing to the downside. So let's go back to the first chart now. This chart looks like the breakout has been made, and it looks like we are now confirming our newly converted resistance into support for validation to the upside. However, if you're looking at the golden rule of 3 here, you have test number 1. This does not count because this is where we're actually starting the trend from here. So you can see the wick low of this candle here is where we're starting the trend, not up here. So we are looking at test number 1 here. Test number 2, and if you remember what I talk about with test number 3 usually presents the biggest capitulation event or a form of accumulation, okay, of sorts. So just like this, test number 3, huge try to the downside. This is the logarithmic chart, by the way. So So in this case, we have kind of a long way down to come and test this area, which is in accordance to what the DBSI, the ARC DBSI is telling me, volatility and momentum. So these are metrics that not everyone looks at. This is data that not everyone sees. Okay, and another thing is that I found very curious is that I am noticing that I'm getting that negative read in the volatility versus momentum profile, which is this down here, these two. If you're able to look at FNGR in your trading view chart, particular to trading view, please let me know if you're able to see beyond the 8-hour chart. So the 8-hour, actually, you know what? Let me look at the daily chart first, because yeah, see, look at this. I'm getting like an error here, and I've already refreshed my chart so many times. The beginning of trading here is the dates are down here, so it looks like it's about April 2015. But if you go beyond the daily chart, you can see that I'm not getting that data. Actually, the buy daily is giving it to me. Let's go ahead and go down the line. So 3-day. That's interesting. That's funny. Let's look at the 5-day one more time. Okay, so the 5-day is yeah, it is giving it to me. So please, I actually noticed a glitch, and I couldn't run my back test based on this, based on what's happening here. It was particular to the 8-hour. So let's just check the 8-hour one more time and see if it is going to show it to us or not. So yeah, this is what I'm talking about here. So the reason why I wanted to do the 8-hour chart is because I can gain through a back test of volatility versus momentum. I can gain more, like several iterations of whenever we dip down into fully contractive levels, which I consider to be anything below the 10th percentile of BBWP for accumulation. So in this case, you can see that TradingView is not giving me anything beyond 12/29/21. This is 2021 here. I can't see the rest of it. Thus, and now I can't actually run a back test on this. So we are beyond this and now started an expansion phase. And it looks like, volatility. And it looks like momentum is still suggesting a continuation onto the downside. I wanted to back test how many times we've actually started an expansion phase from down at these contractive levels and guessed the downside. So I can't do that now because I can't see back here. So that leaves me very limited, and I do not like to trade without a data-backed system. Okay, so this is something I am definitely going to stay away from because I'm not sure why it's not showing me that. The 6-hour time frame is also not showing me that history. So this is, December 2021. 4-hour time frame is also not giving me that history. So that's really curious, and it's kind of annoying. So it's preventing me from having my true edge in the trade. So please know that there is something brewing here, and I can't validate it. But I know, but I feel like something is setting maybe like a trap. So now let's look at the last signal of what I'm talking about could be, and this was the very last thing that I caught just before I recorded the video. Okay, so these are the drives of divergence that we were able to call about about a week or two ago. We actually did catch this bearish divergence, and we did notice that we were going to continue on to the downside based on these primary drives. So divergences usually are the opposition of price action versus momentum, in this case represented by this indicator, momentum represented by RSI, relative strength index. Okay, so we did catch those divergences, and we did continue to the downside. Now, in this case, this is called hidden bearish divergence, where price action is making a higher low structure, or a lower high, and the indicator or momentum is creating a higher high structure that creates a divergence that we're looking at here. So I was going to record the video and tell you that everything looks bullish based on these 1, 2, 3, 4, and 5, the white ones, primary drives of bullish divergence. Now, the bullish divergence in this case is hidden bullish divergence as well. Now, it was very hard to see since we are going through all of this price action here. So that's called phantom. So now we are looking at 5 drives of phantom hidden bullish divergence, and I was about to tell you, let's go. This thing is primed for upside, and we can actually make that validation. Now, in looking very, very, very closely, I did catch I did catch some other drives of phantom divergence. Now, in this case, I did catch this to be as bearish drives of regular divergence. So you're looking at phantom as primary drives of phantom regular bearish divergence. Okay, so that usually happens when price action is making a series of higher highs and indicators are making, or the momentum is making a series of lower highs. In this case, we are making these drives over here that are so close to the bullish drives in the same candle. Okay, so this is why I'm saying that there could be a liquidity trap here, or definitely a bull trap. So this looks like a loading zone for us to just make an upside move based on us doing the falling wedge right here, which is usually a sentiment based formation, meaning that this is psychologically driven only. There's no mathematical properties to the falling wedge. There are mathematical properties to a right angle triangle. Okay, but not these. So in this case, we're looking at a psychological formation prepped to make an upside move for range trading until it's ready for breakout when it gets about 70 to 75% to the apex, like mentioned before. Okay, so this looks bullish. Then the RSI, you're looking at the drives of hidden bullish divergence, all good. But who is looking at the phantom drives of regular bearish divergence on the same candle? Because we are getting that pivot right here, and we are getting that pivot right there. That, and now also the Crypstex indicators. This is giving me a massive bearish signal here. This red dot usually signals sell, and it hasn't recovered into the blue dot, which is usually buy. Okay, so I'm looking at a potential capitulation event coming in for FNGR, but I cannot confirm it since, again, I cannot backtest my volatility versus momentum profile. Okay, so this looks very juicy. It looks like people are like, okay, but this is a good validation of support. So now let's continue on to the upside. It gains all that liquidity. It probably pumps just a little bit up to probably 495, or even at the 1.618. Who knows? Who knows how high it can go? You know, but to tell you the truth, the highest I can see it go, since we're in the 3-day chart, would actually be potentially the $4.24 range, or $4.26 range at the not 618 from the Fibonacci, okay, before finding some type of capitulation. The reason why I can say that as well is because the higher term time frame RSIs are suggesting that downside. I'm sorry that this video is going a little bit long, but I do want my FNGR bulls to know that you are potentially in danger. Okay, so let me load the 5-day RSI. 5-day RSI suggesting a continuation to the downside. Okay, it is sitting at the border between the bear weakness percentile and the bull weakness percentile and the bear weakness. We can actually bring up that diagram here so that you can see. Okay, so this is the diagram for the control zones of the RSI. So yeah, please focus on these 4 zones here, as they are located right here. 1, 2, 3, 4. 1, 2, 3, 4. Okay, so yeah, the 5-day is still suggesting a continuation onto the downside. It has since made a bearish cross beneath the moving average, represented by the pink line. RSI signal is the purple. That's signaling a continuation. Okay, so now the 3-day is also now starting to drive away from the shallow areas of the bear weakness percentile, suggesting a continuation to the downside, and the 3-day and the moving average is also suggesting downside. Okay, let's go to the bidaily. Bidaily is now in the deep areas of the bear weakness percentile, even though it has an upside pivot. Usually when we're in this deep area here, it usually means that we're going to be gravitationally pulled right into bear strength. Okay, now the daily should probably have some upside too. Now the upside of the daily is just outside of the shallow areas of the bear strength percentile. So now it is well within the bear strength percentile. This is why I'm saying that. Okay, now look at the 12 hour. The 12 hour is suggesting upside, but as you can see, it has been using the moving average as a form of resistance, and it looks like it's about to face that resistance one more time. Okay, so there, I was about to give you a bullish signal on this, but I can't. I can't. I'm actually favoring the downside based on this formation theory, based on volatility versus momentum that I unfortunately can't backtest because of the lack of data that I have here, and the Crypstex indicator suggesting a downside. Guys, I would watch my longs on this. Know that I'm not a financial advisor. Please take whatever I do show and iterate within these videos as a form of entertainment only. Okay? Do your own DD and we'll be okay, you guys. If you have any questions or concerns, please don't hesitate to reach out to me on Twitter or Discord. I'll make sure to leave the links in the description below for you to consider joining the ARCa trading community in Discord. But with that said, I wish you well. I wish you a great rest of your weekend, and I will catch you at the bell on Monday. Adios.